Welcome to the second edition of Thrive Haryana, the Tech Startup Ecosystem Meet. Let us start the panel discussion on tech startups and funding dynamics. Let me start by welcoming our moderator for the session, Mr. Chinmaya Saxena, Venture Partner, BEENEXT. Welcome, sir. It's a pleasure to have you here.
Thank you. Same here.
Now, welcoming our panelists for the session, Mr. Shashank Randev, Founder VC, 100x.vc. Welcome, sir.
Thank you.
Mr. Subhash R. Ghosh, Founder, Lemon Advisors, UK Limited and Technoplat Limited, UK. Welcome, sir.
Hi.
Mr. Anup Jain, Managing Partner, Orios Ventures. Welcome, sir. It's a pleasure to have you here.
Thank you.
Mr. Mukesh Malik, CEO, ProjectGK. Welcome, sir.
Hi, guys.
Colonel KK Singh, Chairman and Managing Director, C2DL Private Limited. Welcome, sir. I would like to welcome all of you. Thank you for joining us here. Before I request Mr. Saxena to kindly take over, I would request all the attendees to keep putting their questions in the chat box, and the panel will address a selected few at the end of the session. Over to you, sir.
Thank you. Thank you so much for setting this up. And I hope everyone is having a wonderful Thrive Haryana event. I'm personally very excited to kick this session off with a wonderfully diverse panel that we have. And, as Nishtha just introduced everyone, I would love to actually open up the floor for some introduction and some opening comments. But, just to kind of share with you some interesting stats, just about a week ago, Your Story released this data about the number of deals that have happened in India specifically in the startup space from January 2020 till November 15th, and they came up with this number of 765 deals worth about $8.4 billion that have happened. Now, just to set the context, I think this is definitely a drop that we have noticed from 2019. Levels, and this number is actually comparable all the way back to what was the number at 2015 timeframe. So 2015, about $8.3 billion were invested in the country during the same time period, and it's 8.4 in 2020. So apart from a 5-year gap, that's been the reality. And in the backdrop of this, I think the Indian startup ecosystem story has been a wonderful learning opportunity for all the startup founders. And a lot of new things have happened. And the fact that this diverse panel is there with us today, I hope to kind of get both the perspectives of the investors as well as people who've been in the operational roles, to really share the insights with our audience here. So without further ado, let me just jump into a very quick introduction of the panel again, and I'll quickly share. Let me welcome Anup Jain again, managing partner from Orios Ventures. He's a business leader with over 2 decades of experience in large-scale FMCG, retail, durables, and e-commerce companies. And he's known for diving headlong into challenging situations requiring disruptive thinking and delivering a step change. So welcome, Anup. Next we have Shashank. Shashank Randev he's a founder at VC at 100x VC, India's first venture fund to invest in early stage startups using high safe notes. He's also been an angel investor and an advisor, with a keen interest in the B2B space of emerging technology on startups. And he's also kind of, held multiple roles and launched the SaaS platform for VC Edge, and VC Circle in his earlier avatar. We then have Subhash, who's the founder of and CEO of Lemon Advisors UK Limited and Technoplat Limited. It's a global platform established to incubate and grow tech-based startups. And the focus is to strengthen the UK, Asia, Middle East, and North Africa corridor. So welcome, Subhash, and welcome, Shashank. We then have Mukesh. Mukesh Malik is a business transformation expert and a startup evangelist, actively engaged in innovations in BFSI, retail, wellness, entertainment, and many more industries. And he's been running a consulting practice called ProjectGK for the last 7 years. Welcome, Mukesh.
Thank you.
And last but not the least, we have Colonel KK Singh, who's a retired Army officer and owns a consultancy firm. He's currently working with Caprice Consultants in defense and logistics. He is a startup mentor and an entrepreneur himself, and has worked closely with startups in the defense and MSME sector and academia. So we really love to, we really hope to hear some great startup advice from him in the logistics and defense sector. So welcome, Colonel Singh. Great. So the way we will run this kind of panel discussion in the interest of time, since we have about 40 minutes and we can probably stretch about a few minutes more. We'll start with every speaker here, every panelist here, giving like a very brief overview and introduction about themselves and the work that they've been doing. And we can also hear some opening comments and on the overall topic and theme, which is tech startups and funding dynamics. And then we will go with the flow and have some Q&A based on the expertise area and insights that we can generate in this session. So let me start by inviting Anup to maybe kick this off.
Yeah, I think after too many kind words, Chinmay, I don't know what to add to that. But I guess the topic today is about tech funding, right? Tech. If you're a tech founder and it's about funding in the background of what this year has been and what the next year could look like. So just offering my two bits in it, I think it's been a learning experience for both sides. Nobody knew what to expect. But as investors, we are far more comfortable today than 6 months back in terms of making decisions uh, without meeting founders and without visiting their offices. I think what is become increasingly more important for founders is to be able to utilize this medium to their advantage and not to their disadvantage, which means that this medium has its own limitations. You have to be rehearsed, you have to be practiced. People don't have infinite time. If you're going to, speak something, then it has to come across fluently. It has to be a structured thought. You do not have the opportunity to have that kind of a face-to-face, two-way interaction as you would have in person. So considering those limitations, I think one has to be more rehearsed, more practiced, and people who are not comfortable, they have to get comfortable finally if they have to raise funds. So I think that's one thing that I saw, that communication skills became very important during this time as far as fundraising and being able to convey things was concerned in a lucid manner. The other bit has been, of course, in terms of choosing sectors. Founders today, if you ask them, would you like to start an edtech company? I think 9 out of 10 founders say, yeah, that'll be great because I can raise funds in the next 6 months, I think. There's a flurry of investors running in that direction. Everybody's getting a FOMO. But yes, I mean, there are certain sectors which are impacted by COVID, and investors are currently yet not comfortable investing in those sectors, although some could take a longer view on things, but finally everybody's got an end of fund life. Everybody's got a time horizon. So therefore, it makes sense to focus in those sectors which are seeing those changes on the positive side, and maybe put your best foot forward and then look forward to closing it fast. I would say give yourself maybe 3 months on the outside, go well prepared. So take that time and then go ahead and do that. The dynamics have indeed changed. Things are slower than usual, but it's not like decisions are not happening. So decisions are taking place, and investors are now back on track. Yeah.
Right. Thank you very much. I think communication, learning, and the fact that you have to adapt to this change is reality, and work still continues. Thank you so much for sharing that. Over to you, Shashank.
I think the last 9 months have been very, very interesting. And, at 100x.vc, I mean, we are slightly different from the other VCs in the market because we are coming in at a very, very early stage. And our core objective is to kind of have a large portfolio of 100 odd companies each year, and then kind of be the first institution to check into these companies. So what changed for us during this year is that we thought, after making the first set of 20 investments, we'll move on to the next set. But come March, we saw COVID, and we decided to do a lot of portfolio management and ensure that these companies, which are in various sectors and across sectors, and we were still coming to, in terms of, getting used to the whole COVID situation. We started doing a lot of portfolio management before we decided to move into the next set of investments. So this year has been quite an interesting year. But as a fund, we've not stopped investing. We've in fact completed 29 investments in total. We've made 9 investments this year. And we are just about to close the next set of 10 investments, though our ticket sizes are small. But by the end of this year, we'll be sitting at a portfolio size of 40. That being said, most of our companies have managed to raise significant capital. Adding to Anup's point, I think from March till June, obviously everybody was tense and everybody was trying to figure out what to do. But I think post August, there's a lot of dry powder in the market. Pre-Series and Series A transactions are happening. There are sectors which have accelerated, right? I was just before the panel started, there are product and services which have been impacted. So for instance, would I want to invest in a travel tech? No. But would I be interested in investing in a SaaS company right now? Certainly yes, because SaaS suddenly has accelerated. So some sectors have are really thriving right now, and hence it's catching the attention of investors. So it's a very interesting time, and I'm from my vantage point, because we are at the, so to speak, bottom of the pyramid.
Right.
We are going after many companies. 2021 is very, very exciting for us. So it's been an interesting year, and looking forward to the next year as well.
Great. Thanks, Shashank. In fact, I'll come back to you as part of the panel discussion to kind of double click on that bottom of the pyramid even earlier, because your angel investment experience, should be useful for our audience here. So, moving over to Subhash, your opening comments, please.
No, I think while Anup and Shashank obviously is kind of pretty much covered, but I think the whole English proverb called necessity is the mother of invention is something what I realized in the last 9 months. A lot of new businesses have come up, which are interesting, which are profitable, which are showing huge optimism. From our point of view, kind of companies, what we've seen huge amount of growth are in the retail tech space, SaaS for sure, EdTech and MedTech. Yeah, these are the kind of companies we are sort of focusing on stuff primarily based on the new term called contactless. Yeah, I think that's kind of bringing a huge amount of change and perception drivers in people's mind as well as from investors' mind. So I think that's so if you look at this trend, which will obviously continue for the next couple of years, I guess, keeping all those factors in mind, I guess 2021 is going to be a really, really interesting year for each one of us in the ecosystem. Just not just for investors, for the cohort companies, for the technology companies, and the customers. So I guess that's from my side.
Got it. Seems like you're excited, like many WhatsApp forwards these days, that 2020 please be on your way out fairly quickly, and come 2021.
It's just about a few days now from now, 20 days from now to be precise.
Yeah, great. Right. But the seeds have been laid this year for I think some spectacular
absolutely.
new opportunities.
And yes, needless to mention, UK has already got the vaccine. Hopefully it works.
Actually, we will learn as we are learning other things. So I think good to have somebody else take the lead on this front.
Hopefully.
Great.
Hopefully.
Thank you, Subhash. So we'll move over to Mukesh.
Yeah. Right. So see, point is, I've been looking at least 30 to 40 startups a month at this point in time. I mean, thanks to my stint at R Ventures, last 3 years had been quite interesting in terms of startup interface. And I'm right in the middle of a big corporate conglomerates and startups most of the time. So I get the point of view from both sides as well. One thing that I want to very strongly emphasize on is that there are a lot of in-transit business that have been created because of COVID. And people are mistaking it for a long-term business for themselves too. I mean, for instance, health tech company booking revenues, showing revenues, going to Anup and Shashank and pitching, saying, okay, we've clocked 1 crore this year. Can you fund us? But that 1 crore has come from mask and PP kit sales, nothing else. So that may not really be a business which is going to really last long enough for them. So there is a proliferation of edtech, health tech. In fact, retail also is coming up in a big way. That is something one needs to be wary of, that how long that business is going to last for them. Are they really looking at selling PP kits all their lives? Or are they going to only build content for edtech companies all their lives? Because there is only limited content for 12 standards or K-12 they can create. You just cannot keep Pythagoras theorems in 10,000 different ways that you can teach. I mean, there is only a few number of ways, limited number of ways that you can do it. So people need to understand that where the scale will come from. That's one important part. We focused a lot on getting them market access, and because right now money is the primary driving factor for the business. And knowing Shashank, knowing Anup, in fact, I have my own syndicates as well. Funding is not that easy. Then, in fact, generating business is relatively easier today than raising funds, if at all one we really have to do. There are about 3 startups that I've had in my cohort in the last 4 months. We've generated order size worth $2.4 million for them across borders in last 4 months or so. So that is a good, and this is a very, very good time for you to actually go out and sell your innovations because people are receptive to it. So if you sell them faster, sell them better, I'm sure Anup and Shashank would really be loosening their purse strings and simply say, okay, this is making sense and let's get you more money to support that. So focus on that at this point in time. Raising funds is a longer cycle than it usually has been in the past. But generating business, the sales cycles have been relatively much shorter. Decision making is much faster because, as has been mentioned in the panel, everybody's trying to do something or the other because we still not know what is going to work for us all the time for a longer run. So that's something which is very, very important. So make use of your experiments on the others and make money while you're doing it. That's an important part.
Great. Thank you for those insights, Mukesh. Okay, Colonel Singh.
Yeah, my observations and experience in last 1 year has been slightly from a different perspective, both as a user and as a common man. When I see it, where are the problem lies? So entrepreneur in me finds out the areas which are gaps exposed post-COVID things. Government has not been able to have the solutions. Industry is struggling. All these are indication of the gaps. And when I notice this, especially when I look at my domain of defense and security and logistics part, enough opportunities have come up which can be tackled by the new entrepreneurs, and technology will definitely will give them away. Just for the sake of discussion, like aviation industry found out lots and lots of things to be newly designed for them to get it going. Similarly, in hospitality industry, FMCG, retail, e-commerce business, medical healthcare, everywhere they've found out struggling. And the worst is the logistics of manufacturing that has put under stress. So the areas which I've been looking for, how the new normals will define to address these gaps. And this is the area where I feel the new startups should focus their energies, and technology should be infused to tackle those which are being used as normal processes in those industries. So that is the area where I find it, how hospitality industry will have no contact business, how FMCG industry will have the new way of doing packaging, how the supply chain mechanism will have a new tracking systems place. So these are the areas which I find are lucrative and opportunities which are should be forthcoming, and these all the venture capitalists sitting here should be eyeing those solutions which are really troubled the world, and we need solution right now. That's my lookout for this situation.
Great. Thank you so much for sharing that perspective. So I think now, just like opening up the discussion, and I think what I'm going to try to do is, not kind of overly cloud everybody's view through the COVID lens, because I think COVID, as we were discussing just before the kickoff of the panel, that a lot of things have been said and done about COVID, and everybody has learned, their lessons through it. So, let me start by asking a question to Anup, because his expertise in the consumer and the FMCG side of things has been like unparalleled. So, when you look at these two phenomena from, let's say, as an investor, when I also look at it, there are, one, obviously acceleration and digital adoption of, customers getting, comfortable in ordering things online, having consumer brands purchased in a very different manner. You see that there are companies that are making investments in trying to create that direct customer relationship, like in the D2C brands, right? So my question to you would be to see, what are the kind of new tech disruptions or innovations that you're seeing, especially in these consumer goods, retail, FMCG kind of space, that really make it exciting for you.
Good question. I think this is one of the largest industries of daily consumption that is ripe for disruption, and it has had too many years being accorded for leadership to the same old players.
Right.
And I need not name them; they're all in our pantries and kitchens. Consumers, are taking a very, very hard look at the uh, rear packaging label and seeing what they eat, seeing what they consume, and want to give the best to their families, from all perspectives, especially, removal of baddies uh, is very high on everybody's agenda. Adulteration, purity, use of preservatives, artificial agents, all these things have been put in these products over a period of time, and people have come to understand that these are leading to diseases, these are leading to chronic illnesses, they're leading to unexplained, disorders, cancer, etc., all of that. So consumers are reconsidering all of their choices as far as household consumption is concerned like never before. This is an unprecedented watershed year in which everything is being reconsidered because you've spent so much time with family and so much time at home, and you've had all three meals at home, you've had every other opportunity to reconsider what you're consuming. And therefore, the rear label has become more important than the front label. Bollywood celebrities, dancing in a 30-second commercial are not going to make a mother impressed about purchasing that product and bringing it home and feeding to her kids anymore. And I'm taking a harsher view of things, but I think there is far more influence out there which is available through social media, um, social platforms, and therefore this gives us the opportunity, as founders, to go and completely ride out this revolution that is happening and form direct connections with consumers and hence the D2C space. Channel margins of 30 to 40% with no value addition, they are just gone because guess what? Your address is better known to the delivery driver of Zomato, and he can deliver to you in the cheapest cost possible. And one of our companies, Country Delight, is already doing that. It has today become a 400 crore company in the field of milk and dairy and now bread and eggs. Uh, you know, uh, Not by utilizing retail, but by going directly and establishing its own pipe using off-peak logistics. And it's got a, extremely low cost, unimaginably low cost. No FMCG brand can match it. The paradigms, therefore, of supply chain, paradigms of being in touch with your consumer, paradigms of market research, which I think today is dead in its conventional form. There is no need to conduct third-party market research. Nobody comes ringing a doorbell and saying, "I want to ask you about, your detergent," or drop a sample at your house and all of that. All those paradigms are all gone.
Right.
Retail itself has undergone a complete revolution. Retailers have, adopted tech on the supply side because it suited them. It helped them give access to prices and products which they didn't have so democratically and so easily. So the likes of Udaan, etc. In the medium-sized grocery space, the likes of Gram Factory, where you have invested, or Gully Network, etc. They're doing
Right.
that with the mid-sized retailers, which are GST registered, and therefore they are more have higher digital affinity, if I may call it, but they never had access to technology. So I think, look, the advent of consumer being in control is finally here.
Right.
They have the information, they have the social influencer groups where they're continuously exchanging thoughts about the products they use. They are recommending it to others, or they are actually recommending it to others not to use it. So therefore, no amount of, blitzkrieg of marketing on an IPL cricket match or signing up the best celebrity is going to do the trick. Finally, your product has to speak. Supply chain logistics can be managed by the brands themselves because the paradigms have all again undergone a change. You have to build an efficient pipe to the consumer's house. Uh, Consumers has also got used to negative balance, or sorry, negative working capital, which is great for companies. So you fill up your wallet and then only can you order. It's the same as, if you don't have wallet balance, you can't order a taxi on Ola. So they're happy to engage with companies cashlessly, contactlessly, and do be in touch with brands. It's a great opportunity to build new brands, and brands like Country Delight or Beard or Dollar Shaving Club Many of them have already proved that. Yeah, so it's an exciting time.
No, great. I think you threw in a lot of insights in that in your response, and I think the key takeaway, and I can vouch for. I'm a customer of Country Delight, and I think I've just been blown away by the consistency. So I think what they've also done is they've shifted the standard for the industry to a much higher level, right? In terms of your ability to kind of order till very late in the night and still kind of get a customized order delivered early in the morning without fail. I think the fundamentals of kind of building that relationship with the customer are stronger than ever, and they need to be stronger than ever. That's one key takeaway. And I think the other thing that you really highlighted is that all the barriers that people used to have in mind, or startup founders used to have in mind when they were thinking about starting up, or there are obviously some realities in terms of creating consumer businesses. But at the end of the day, I think the whole supply chain to consumer connection side of it, and the influencer side of it, and the marketing side of it is all up for disruption. I think that's the bottom line, which I think is great for the future for this industry. So thank you so much for sharing that, Anup. I'll just do like a follow up question on just the funding aspect of it, right? So in a brief manner, if you could just like explain, uh, has the thought process for investors who've been looking at this space changed substantially because of COVID, or was that something that you were fundamentally looking at happening as a natural consequence of a growing economy like India, where consumerism is spreading to multiple levels? So that's probably been accelerated, but has that view changed?
So the view has definitely changed. We as a fund do not invest in retail brands where early venture capital will go in funding, space on the shelf. We don't believe in investing in that space because we feel that it's plain vanilla. And what's so exciting about it, and when somebody recognizes this is a trend, they'll either buy you out or replicate it in very good time and be better on the shelf because they've already got 20 other products on the shelf, which
Right.
means the large companies can play that game.
Right.
You have to play the game differently, and therefore D2C is what we believe in. We also believe in social commerce led private label brands for cities which are beyond the top 5 cities, because e-commerce 1.0 does not work in those cities.
Right.
Right? Grofers, MakeBasket, Amazon, Flipkart, etc. They all depend on a certain order size because the logistics cost is fixed. You cannot have a 150 rupee order being delivered at a cost of 150. That doesn't make any sense sustainably, right? Otherwise, you have to have deep funding. So e-commerce in the non, sort of metro cities does not work in its present form. You need social commerce. What that means is that there is a reseller who is aggregating the orders so that the composite order can be delivered at her house. She becomes a reseller,
Right.
and then she can distribute it to her neighbors and friends who are living around, and she can make a nice commission on top of that. So that model works, but the individual e-commerce delivery driver going and delivering a 150 rupee order to 10 houses, that doesn't work. So that model gets restricted and capped there,
Right.
unless GDP per capita in the country grows phenomenally well, which I don't think it is going to grow in the next few years at least. So that it becomes the other model that
Right.
our fund at least believes in investing behind. So top cities, you have the D2C brands. Beyond the top cities, you have the social commerce brands.
Excellent, excellent. No, that really is a wonderful thesis as well. Great. So we'll move over to you, Shashank. So I think the interesting part of your life has been that you've done multiple hats, right? And you've been an angel investor before you kind of now became a formal institutional VC. So welcome to this side of the club. Uh, the question for you is that what kind of changes have you observed along this journey now, specifically in funding dynamics, when the options for early stage investment for founders have gone up, right? So what's your take on this whole development and this whole space in the last few years?
Yeah, I mean, my journey for the startup ecosystem started way back in 2009 when I was the founding member for VCCH, which was a SaaS platform by VC Circle. And we got
Right.
acquired by News Corporation in 2015. So I actually saw the advent of private equity and growth stage VC funds from 2008 on till 2015, and some very interesting investment thesis and the kind of companies which were being backed and funded, since we were tracking them in terms of the research platform. It's only 2016 onwards that I started actually getting into investments as an investor, angel investor, and then also before 100x, I was part of a fund. And what was interesting to see is that we now, for the first time in India, have larger private equity fund, ex managing director of private equity funds come and start their own smaller funds. We're also seeing a trend where existing growth stage funds are realigning and retweaking their ticket sizes from 1 million, 2 million, all the way down to 500K, and looking at very early stage companies. So for the first time in 10 to 15 years, today the ecosystem is very alive, so to speak. COVID, not COVID, right? In terms of the support you have from an incubation side, in terms of the kind of fund you have, access to funds. So today, for the first time, entrepreneurs have a lot of access to capital, smart capital, sector specific capital. You are building a SaaS company and you want to reach out to a seed fund which is only specific to a SaaS or a developer community, so to speak. You've got that. That is a very, very good indicator of where we are in terms of the ecosystem. That's first point. Second point is this sheer opportunity, as Mukesh also pointed out, the sheer opportunity which has arisen due to COVID. Some businesses, yes, you will find who are taking short-term advantage by selling, let's say, labeling themselves as healthcare and selling PPE kits, right? Which is a very short-term thing, right? But then for the first time, there are also businesses which are emerging in healthcare, which are trying to, let's say, figure out and fill in a gap on a permanent level of, let's say, removing the first or second time consultation required for diagnosing cancer, right? Which can be enabled on a platform basis. And those are situations which are getting accelerated. So you have both sides of the situation. Either way, it's a good time to fail quickly and experiment something new. From an investor's perspective, I think I'm seeing at the stage which we are at, we make all our investments through a safe instrument, which essentially is a non-SHA round. And the only reason for that is because we believe there are many opportunities which are emerging. We are in a position to close transactions quickly within 20 to 30 days.
Right.
And then our objective is to back companies which where we feel we can add short-term value, 3 to 6 months, and get them metric driven so that a pre-series A or series looking at them. Because mind you, series A fund or a typical series A fund, and Anup can back me on this, is they'll do 10 odd deals a year. Well, they'll really put their head and really figure out what's the long-term play over there for the next 3-4 years. And I think and I was on a panel discussion earlier this morning, and we were discussing the same thing. 2010 and 2020, things have changed so much that just in the last 3-4 years, today for an investor and an entrepreneur has a lot of opportunity to grow. Investors, in terms of startup investment asset class, is really increasing. 2020, I think, is a year where your real estate has fallen off the charts, and everything is here and there. And startup investments has become truly an asset class which passive investors or enterprising angel investors can start looking at. And what we are trying to do is also enable them to invest through the SQL safe note or a safe note which we use, and thereby create that base in the ecosystem. So that's my take. I think it's never been a very there's never been a better time from an investor side to start investing and start looking at startups. Albeit you need to figure out which sectors, have some level of understanding, and also a great time for entrepreneurs, Indian entrepreneurs, to be start building out solutions, because there are as Colonel Singh said, there's so many problems on the logistics side, on the warehousing side. Just to quickly add a point, for the last 4 years, ever since I've been on the investment, I've been looking at automation in manufacturing for the longest time. I've seen so many solutions, and some very great ones. They've never been adopted for some reason or the other, right? There are
Right.
solutions in the market. For the first time, some of those companies picked up pace during COVID, purely because of fear of social distancing, and we need to maintain that. SMEs, for the first time, had the opportunity to automate it. It still hasn't come through, despite this great opportunity of 9 months lockdown. We still not have been able to transform that. So there are gaps which needs to be filled up. But again, this is a great and golden opportunity from ends. And that's my take on it. There are macro level issues in terms of policies and all that, but I think it's a great time for India to kind of churn and so that's my take in terms of how it's really evolved. And it's a great time to be making investments, at
Right.
least at the seed stage, and identify early opportunities.
Right. I think that's very true, and I think the other challenge that sometimes I worry about, and I'd love to hear your thoughts and even Anoop's on that, is that there is so much of kind of signal to noise ratio, right, which has also gone dramatically up, right? It's just the sheer volume of activity that has started to happen in this space. It's very difficult for, I think, for really great innovative founders to kind of break through the clutter and kind of get themselves exposed. I think they have to probably work a little bit harder, because because of almost like democratization of the startup opportunity for everyone. There's so many plays that are happening constantly. So I think the investor side of the scheme of challenge is that you have to find these wonderful founders who are very creative, betting for the long term, creating sustainable businesses. At the same time, you're also seeing a lot of these short term opportunities pop up. So I think an investor and the founder have to do a little bit of homework to make sure that they're kind of standing up above the kind of a differentiation cloud, to just get that conversation going. Love to hear your thoughts and Anoop's perspective on it. Do you agree with this?
Anup, do you want to go first?
No, please go ahead. Continue your thoughts here.
So, because it's a great time, the onus completely lies on the side in terms of which companies they want to back. Hence, it needs to be backed by research. You need to have an understanding of the sector you're backing. It can't be gut. Even if you're an aspirational investor, an angel investor, if you've been listed, you technically would do your due diligence on that particular investment. Same principles apply on the startup side, and more so on an institutional fund. So a lot of time needs to be spent in terms of, do you really fundamentally believe that the sector is going to scale? Does have does he or she have a unique proposition which could possibly scale, as Anup mentioned, tier 2, 3 or 3 opportunity, right? If it's not a me too, then where is the opportunity? What's the moat and unfair advantage, so to speak? And similarly for entrepreneurs, I think India is a country of problems, right? So there are so many solutions to be offered,
right
from a tech and non-tech. And if founders are building out solutions for the problems which seem to be there, or can be fixed in tier 2, tier 3 capacity because of the data penetration, so on and so forth, and they only focus on that and forget about being identified by investor, I think then it's a win-win situation. Because as much as they want funding, we investors we're also looking for outliers.
Right.
So rest assured, if they're building something, we'll find them, and those processes are coming into this. So I think investors need to do their homework in terms of research,
Right.
and entrepreneurs need to focus on what solution they're solving. And in my context, it needs to be, what's the great problem you're solving for India? And I think rest will just follow, because again, the discovery process will just happen very swiftly, purely because there's so much noise.
Got it. Thank you so much. 30 seconds rejoinder from you, Anup, on that.
I think I'll probably wait to hear some other points of view, and then maybe, yeah, I'd love to do that. Yeah.
Great. So I'm gonna switch gears a little bit, and we're gonna move to Subhash with a question, because I think he's the one who kind of brings in a lot of international perspective to the table as well here. So Subhash, you specifically, since your lens is this whole UK, Middle East, Africa, and Asia kind of corridor, what kind of startup disruptions have you seen, and what kind of new opportunities have you seen, that have opened up recently?
Sure. I think one big thing which has obviously happened over the last 8-9 months is, as human beings as a race have realized the value of their lives. And I think the whole concept now has gone down at the consumer level, at the enterprise level. And if you broaden the thought, if you think everything that is happening is how you sort of minimize the risk. So if you ask what we've been saying, I mean, we've been operating in Singapore since 2017, and then the UK since last year. And what we've been seeing, and the kind of companies what we've been recruiting is obviously are those companies which were trying to sort of mitigate that aspect, that risk, and create more value for either for human beings or for enterprises. We're not investor, first of all, but obviously given the programs what we run, we are a sort of an accelerator. We run incubation for about 3 years for every company that we recruit. So what we is trying to do and what we've been seeing as well, I mean, for instance, there's a medtech company which is offering stethoscopes using Bluetooth as a service, Bluetooth as a technology. Now, what that happens is when you use that kind of stethoscope, you are obviously doing a lot of contactless aspiration for the patients. Okay, so on the IoT side, if you look at it and using IoT and consumer health tech, we've got people who's offering something like a smart lighter. Now, it's lighter obviously is one thing which people like to reduce smoking, but given the kind of wide length and breadth, the way they're offering the service, the device, it brings a huge amount of change in the way the consumer would behave. So that's the trend what I see have been happening, and we've got getting companies or rather innovators, rather I would say, from across the world. We've got people from Portugal, from Indonesia, and most importantly, obviously from India, who are coming and becoming part of our cohorts. But and the trend point of view, if you ask me, yes, investors are looking at newer opportunities, newer innovations. Okay, I think one good thing which is happening is which I probably did not see earlier. Investors are now giving more time to understand the problem that they resolve, okay, into new technologies and the difference that they're creating now than they were ever. So I think these are the couple of trends which I would say are making huge motivational factors for new innovators, new product owners. And I think that's what I see the trend would continue for next couple of years. While we are obviously focused in terms of connecting all the dots across most of the companies, um, yes, a lot of funding is obviously happening between UK and India. UK investors pumping a lot of money in Indian outfits as long as those companies have an entity registered in the UK, because that gives a lot of tax saving to the UK investors. But yes, that's what I guess I would like to sum up to.
Great. Thank you so much for that perspective. Great. So I think we'll move to Mukesh. Mukesh, you had touched upon this topic in terms of your work, especially with both the customer side of things and the startup entrepreneurs, and we are also seeing a lot of acceleration adoption of transformative technologies, whether it's coming to address remote teams, productivity pieces, or virtual collaboration, etc.
Right.
What do you think are the kind of long-term opportunities, and both from a business's perspective on how businesses are looking at this landscape and how entrepreneurs should kind of see where these opportunities exist specifically in India?
Well, see, I mean, taking cue from what Anup was talking about in terms of D2C and B2B businesses thriving more, there is one big reason that I mean understood and that people have been talking about is that there is not enough readiness required in terms of adopting any B2C or a D2C solution. I don't need to be tech ready all the time. My infrastructure doesn't need to be in place for me to be able to adopt a D2C solution. All I need is an application, education on the app, and I'll start using it in certain ways and all this stuff. Whereas from a B2B perspective, there are a lot of infrastructure challenges. There are a lot of learning, unlearning challenges, change management, adoption. So B2B definitely becomes a long-term aspect where adoption will take place. It'll be there are management which will have to change. Like Anup mentioned that we still have dinosaur generation people running consumer goods in various ways and still are doing good for themselves in certain ways and all. So that's one part of it that's very, very important. Secondly, the early stage entrepreneurs or mid stage entrepreneurs, we are still relatively policy immune. Taking a point that government policies mostly happen at a macro level, people impacting larger conglomerates and how things really have to work. Even if my GST differential comes in percentage value, for a smaller entrepreneur, the overall number will be it will be marginal impact if you really look at it, that particular point. So someone who's paying just 50,000 rupees GST a month, even if there is a 2% or a 5% variant, it's just 2,500 rupees. So it really doesn't change life that way and all. So that's something that one really has to understand. Very importantly, that don't worry about, as you said, noise and the signal value of it. So let's not worry too much about the macro policies that will going to be made. We still have to go a long way to actually be impacted by those macro policies to start with. Secondly, do not really get swayed away just by the D2C or B2C, because they will always have an immediate growth path. But we've seen churn, retention, all those issues that keep coming in terms of D2C and B2C businesses and all this stuff. And B2B definitely has a much, much longer perspective and much long-term perspective that comes in from that side. Investment side also as well. B2C and D2C people have well-defined evaluation models that are in place. I've seen most of the fund houses. I talk to them day in, day out. As I said, I own a syndicate of my own where we do that mathematics as well. We do this, it's very easy for everybody to understand because there will be population increase, there is a consumption increase, there is a pattern. People understand that very well. And that's what happens. And that's why entrepreneurs are also moving more and more towards B2C and D2C. That's what's just happening. B2B, it's difficult to be able to account for so many variables that really come in and overall impact that really has to come in. Like Shashank was mentioning, this is a great time for SaaS applications right now. Adoption is good. People can really take it. That's what happens and all. For all those factors to be budgeted in, I think we need to educate also ourselves a lot, considering the environment is going to be very, very different from 21 till 2025. It's going to be very different world, very different than what it was from 2015 to 2020. People's perspective has changed. Like Subhash mentioned, the value of life has come up. People take very conscious calls and conscious decisions nowadays. People invest in for long terms. And now people have also started building for contingencies, which never happened earlier.
Right.
Everybody thought life is so smooth and so good. So people have started budgeting for that also as well. So these are two different worlds. Look at them differently altogether. And there is a different level of expertise that is required. I have had investors and funds surrendering saying that your technology is way too deep, will not be able to take it any further. We just can't do, we just don't have the capability to do the due diligence on this. But if you integrate it with some particular product which will sell in the market, we are in.
Got it. Understood. Understood.
So all that simply things happen and all. So just understand that particular word.
No, very helpful. Very helpful. Thank you for that context. I'll move to Colonel Singh. Your experience in the logistics sector, especially and the defense sector, specifically, I think is going to be very vital because logistics sector has actually been the lifesaver for both citizen and services alike and companies alike during the pandemic, and we've seen how that can change the game. What can you tell us about the startup activity in this space, and where do the opportunities still lie going forward?
Okay. Basically, I will cover the area which was impacted in the logistics sector and how it has unfolded the opportunities which I see it can be exploited by new entrepreneurs. First, I would like to just get on with things which have become a new normal. One is no contact logistics will be an area where people will be looking at. There will be an expectation from the buyer side to get into a minimum people handling it, and that's where the issue which Subhash was pointing it out about automation part. So this is where we will be looking at is a focus of the new generation. Traceability, tracking your consignments will be an issue. So new technology, new methods will have to be followed. Sterilization, sanitization, and smart logistics, where from the point of buying the raw material to the time it's packaged and delivered, there needs to be a sense of accountability. Now, that is the part where people have to build in the systems, their ERPs have to be managing those. So people have to open their horizon into these areas. And least not is the blockchain, because the most number of things which are now going to get online, cyber activity will have to be dealt with accordingly. So cyber laws, cyber security issues, blockchain technology will be fully exploited now because you will have to get the two ends connected. So these gaps which have been identified, people have to use the best of the technologies to cover those areas. One change which I find it's now going to be from global to regional because of the areas, the monopolies people trying to create, they will have to be changed over. So you will have regional logistics have to be catered by different brands, different models, and then take control of it and maybe replicate it to the other regions.
Great.
Inventory management is another area where you will see the inventories have to be stocked in a manner to cater for a contingency for at least for a short period of time to build it up the capacity.
So Colonel Singh, sorry, I'll have to pause you right there. Unfortunately, we seem to have run out of time, and I just want to make sure that we don't drop off abruptly and kind of close the session. Hopefully, we'll get more opportunity to come back to you soon. But I just want to quickly thank the panelists and everyone here to have actually shared your insights. I think I found them personally very useful and valuable, and hope the audience here would have benefited tremendously. And we hope we can do this actually again, because I think there's a lot to be uncovered as we step into 2021. So, with wishing everyone here a wonderful 2020 and a fantastic rest of the event, I'll close the session. Thank you so much.
Thank you very much.
Thank you for your time. Thank you, guys. Pleasure. Happy New Year to you too.
Bye-bye.
Thank you.
Yeah,
Thanks a lot.
bye-bye.
Bye-bye.